Every economic crisis creates opportunity if you know where to look. We just hired a new writer for Market Briefs, and one of the most difficult parts about our training process is we have to train you to be an unbiased writer. And the reason why this is so difficult is because every person, every human being who has a soul has emotions. And when you have emotions, naturally you have some biases. But when you're writing, and when you're looking at the financial news, what you have to be able to do is cut through the noise and cut through the emotion and understand that there is no good and there is no bad. It just is what it is. I'll show you what I mean. When the markets are booming, is that good or is that bad? Most people are going to run to tell you that this is a great thing because now stock owners are making more money, asset prices are rising, it's good for the economy, that means businesses will have more money to spend, and that means people, if they sell their stocks, will have more money to go out and shop and have more nice things, which is good for the economy. But what about the people that don't own stocks and they want to own stocks? That means now it's more difficult for you to go out and own a stock. Stock prices rising mean now you need more money to be able to go out and acquire some asset ownership, which means it's more difficult for you to go out and compete. It's more difficult for you to go out and buy stocks because it's so much more expensive. Or to make it more interesting, let's flip the script. When markets are crashing, is that good or is that bad? Again, most people will run to tell you that markets crashing is bad because that means people are losing money. That means companies are losing value. That means people will have less ability to spend. That means companies might go bankrupt. That means people might lose their jobs. But it can also create opportunity when people use this as an opportunity to buy stocks or other assets at a discounted price. I mean, I can tell you from experience that when the 2008 real estate crash happened, it was a huge opportunity that allowed me to make a lot of money because I was going out and buying real estate for pennies on the dollar. Likewise, when the 2020 pandemic happened, yeah, it was bad in the sense that the stock market was crashing, but it created a huge opportunity for me because I was able to go out and buy a lot of stocks at a discounted price, and I was able to make a lot of money because of that opportunity. And this is where most people won't tell you this because it hurts people's feelings and it feels uncomfortable and it gets people triggered. But this is the dichotomy of our economic system. There are going to be winners and there are going to be losers. And if you want to be able to find the opportunity, you have to be able to separate the emotion and find the opportunity. And that also means you have to be able to see both sides of an argument. And that's unfortunately very difficult in today's society because people are very emotionally charged with things. It's very easy to get emotionally riled up over whatever the topic is. And when you do that, well, it's very difficult for you to see the other side of an argument. Let me give you a few examples so you know what I mean. When Spotify comes out and they announce that they're going to raise prices for their services for the millionth time, what happens? Well, naturally, it makes their customers very angry because now I have to pay more money to listen to stuff on Spotify. But on the other end of that same coin, that very same news is making somebody very rich. You can see how this triggers people. When Meta comes out and they say that they need to restructure their company and they're going to lay off 10,000 people, this naturally makes their employees very upset because now people are losing jobs and people are not happy when they lose their jobs. Again, if you look at the other side of that same coin, that same news makes some people very rich. When you hear the news that unemployment is rising, is that good or is it bad? Well, it's bad if that means that you're losing your job, but it's also good on the other side because for the Federal Reserve Bank, they've been waiting for unemployment to rise. That way maybe they can start cutting interest rates. This is why the psychology of investing is so important because humans are emotional beings. Every single person, I hope, has an emotion, but money doesn't. Now hear what I'm saying very carefully. Am I saying that you need to be this emotionless, selfish, self-centered, money-hungry, greedy person who only cares about money? No, absolutely not. You should have emotions. You should feel things when you hear somebody loses their job. But what I'm also saying is you have to understand the way our economic system works. Because if you don't, you're going to continue to be a pawn in our system. And unfortunately, the problem here is most people are never taught a thing about how money works and how our economic system works. So then you go to school, you work hard to get a degree, you work hard to work at a job, but you have no idea of what's happening in our economic system. You have no idea how our economic system actually works. You have no idea how the rich keep getting richer, and all you're doing is getting upset because of the way the economic system works because you never understood how the economic system works. But if you understand the system, well, now you can benefit from the system as well. For example, when the government comes out and they say that they're going to launch a new spending program, is this good or is it bad? Well, if you're on the receiving end of the spending because the government is paying you money, they're writing checks to you, it's good news because you're getting money in your pocket. But it's not so good news if you're the one that has to pay the price through inflation, or if you have to pay the price through your taxes. Now, these are things that we've been covering in Market Briefs, by the way. Market Briefs is my free financial newsletter where every day my team is working to break down what's happening in things like the economy, the stock market, the crypto market, the global economy, and our own economy into a fun, witty, and easy to read newsletter. You can read Market Briefs in less than 5 minutes every morning, and it's completely free. So if you haven't joined Market Briefs yet, I got the link to how you can join down in the description below. Or you can go to briefs.co/market. That's briefs.co/market. Now here's the thing. I'm going to be as transparent as I possibly can. You can hate me for telling you the truth, but I'm going to tell you the truth. There's going to be winners. There's going to be losers. That's the way that our world works. Now, if you want to be a winner, you have to understand how our economic system works. And that means every decision that is made in our economy is going to have a winner and it's going to have a loser. Now, in order for you to win in this economic system, that way you can take care of yourself, you can take better care of your family, and so you can take better care of your community. Number one, you have to understand the system, and you also have to understand how to find opportunities. Because anytime something bad happens, that creates opportunity. And what you need to be able to do is figure out how you can find the opportunity. And one of the things that I talk about to help you find these opportunities is to look for POOP. P-O-O-P. POOP. Because what POOP stands for is panic, leads to overselling, leads to opportunity, leads to profit. We have seen this POOP play out time after time after time. When the 2020 pandemic happened, we saw panic because people were freaking out in the market, which created the overselling, because people started selling their stocks because they thought the world was going to implode, which created an opportunity for the financially savvy investors to go out and buy, which created the profit potential. Likewise, when the 2008 real estate crash happened, we saw a whole lot of poop happened because when the 2008 real estate crash happened, people were panicking. People were panicking because home prices were crashing. I started investing in real estate in 2011. And the perception then was if you bought real estate, you were going to go bankrupt. Even people who had money, even people that were savvy investors told other people, including me, that you shouldn't touch real estate because real estate is dangerous and it's a risky asset. Well, the panic also created overselling. Now, of course, some of the overselling was due to foreclosures, but people were also selling out of their homes because they kept seeing the values of real estate dropping and people thought homes were going to be worthless. The overselling also created opportunity. It created opportunity for people to go out and go against the grain, to do something that the majority of people were not doing, and purchase those assets that were oversold, which then created profitability. We also saw this happen during the 2000 dot-com bubble bursting. When the dot-com bubble burst, it created panic. People thought that the internet was done for. People thought this internet was just a fad and nobody was going to use this internet thing ever again. That naturally created overselling. People started selling off every internet stock. People started selling off every tech stock. Of course, there were bankruptcies happening. Of course, there were bad assets out there. Of course, some of these companies were going bankrupt. But it also created opportunities for savvy investors to go against the grain, to do what the majority of people were not doing, and instead of selling, going out and starting to buy these assets for 91% off, which then created profitability. So, when we're talking about now how you can use your money as an investor, what you have to understand is you have to be able to cut through the emotion. You have to be able to cut through the noise and find opportunity. And sometimes that means you're going to have to be able to separate the emotion, because it's very easy to be emotional. Humans are emotional beings. Things trigger people. When you hear the word President Trump, that gets people riled up. They get some people excited. They get some people very angry. When you hear the words President Biden, they get some people very angry. They get some people very excited. But what you have to understand is, as a financial investor, you have to be able to cut through the noise and find opportunities, because at the end of the day, it is up to you to take care of yourself, your family, and your community. And if you want to build wealth, you have to be able to invest your money strategically. And if you want to find the best opportunities as an investor, you have to know how to find those opportunities. And those opportunities many times come through crisis as well, because every crisis creates opportunity, but that requires you now to understand how these things work. Because unfortunately, most of us have no idea of how the economic system works. We just go through the system, keep getting screwed over by the system, and then get upset when other people get rich in the system. I want you to be one of the people that can benefit from the way the system works, but that requires you to invest in your financial education and learn how the system works. That way you can win in this economic system. Back in 2023, the Federal Reserve Bank said that a mild recession was, quote, the base case for our economy. Since then, not only has the Fed canceled their recession forecast, the Fed now expects economic growth in 2024, 2025, and 2026 to be even stronger than they previously thought.